Welcome to Chit Chat Stocks. Before we get into this episode, we want to talk about our friends at Public. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a bond account at public.com. That's a pretty big deal because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. So while other people are watching their returns shrink, you can sit back with regular interest payments, but you might want to act fast because your yield is not locked in until you invest. The good news, it only takes a couple of minutes to sign up at public.com. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome to Chit Chat Stocks. This is our monthly research episode. I am one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. Like I said, we do these once a month. Brett or I does some deep research into a stock we like or are interested in, and this month, Brett did some digging into spoiler alert here, wide moat Mexican stock. And I'll let Brett kind of take it from there. I guess before we get into the specifics of the business, Brett, maybe give any shout outs to the newsletter as well, but what inspired you to look at this stock?
Well, two things. One, we're looking at, or I have looked at, the stuff around the Mexican reshoring theme, and it seems like that is taking off, which we'll get into. That's one of the sections of this episode. I'll kind of go through the details in there and how that thesis is coming to fruition, which has kind of been talked about over the last few years. And second, what I'll call our Latin American correspondent, Ian Bezek. He's been on the show before, covers Latin American stocks a lot, and I gotta say, this is one he covered, and I thought, hey, that's something that interests me. Let's look at this. This is something I could add to my portfolio, and we'll see if I do today.
All right, and we're going to be digging into the specifics, particularly of Bolsa Mexicana, which is the name for anyone who's not familiar. Actually, it's a little longer, and we'll talk about that, but everyone calls it Bolsa. But before we do, I mentioned that it's a wide moat business. What exactly makes and this is a stock exchange, by the way, for anyone who's not familiar with the name, it's a stock exchange. What actually makes stock exchanges such wide moat businesses?
Yeah, let's get right into that. The first section I have here is why a stock exchange is a wide moat business. And I think that's important before looking at this specific company to understand why these have been durable assets over the long term. Now, for any disclosure, for anyone listening to this, there may be some charts, graphics, or anything else we reference during this episode, and that will all be included in our free newsletter, which you can subscribe to in the show notes, Chit Chat Stocks on Substack. So, stock exchanges are one of what I would call the first examples of what Stratechery calls aggregation theory in modern capitalism. They aggregate supply and demand for financial assets, making it increasingly impossible for competitors to replicate you as long as you, the exchange, maintain the most supply in the market. Some may define this as a network effect, and I think that is true, and it's analogous here, but it's not entirely what a stock exchange does, and it's not entirely where their moat comes from. So what is a stock exchange? I think a lot of people are aware of, right? You see you're about to buy a stock and you go, well, okay, I got this one. I'm about to go through my broker, hopefully public.com, one of our good sponsors. And you see, okay, this one's listed on the NASDAQ. This one's listed on the New York Stock Exchange. This one's listed on the OTC markets, or an international one could be on the London Stock Exchange. It is essentially just a marketplace where financial assets are listed and available to be bought and sold by investors. In modern times, exchanges are almost entirely digital, and they'll eventually get to 100% digital, I'm assuming, And investors are buying and selling financial assets digitally through registered broker-dealers. For example, our sponsor, public.com, although there are many others out there. Most countries will only have one or two major exchanges supplemented by an over-the-counter or OTC market for stocks that are public but do not meet the listing requirements of the major exchanges. So where does that competitive advantage come from? The competitive advantage of a stock exchange derives from the aggregating the supply of primary listings. Now, this can be stocks, bonds, derivatives, ETFs, etc., 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 on their marketplace. This drives demand for the exchange. Investment bankers and backers of initial public offerings will want to list on the exchange with the most activity. Brokers will care about getting access to the exchange with the most listed financial assets because that improves the value proposition for their investing customers. And on it goes because it repeats. You have the most people trading on the exchange. Well, we're going to want to list there because it has the most liquidity. And being the custodial of financial assets, this is a high trust operation. I mean, you can't screw this up. You can't say, well, we screwed up our database. All right, well, let's try to figure this out. That would ruin your reputation. And as an exchange gets older and older, the brand gets trusted more and more. For example, Ryan, let's say you're going to IPO. Would you rather list on the New York Stock Exchange or a random upstart exchange with zero listings that you've never heard of?
Well, I think the question kind of answers itself. Probably the New York Stock Exchange. And the stock exchanges that have never had any listings or they're startups or whatever probably lend themselves a little better to spotty or shady companies that can't uplist to the best exchanges. So probably kind of defeats itself ultimately if you're it kind of reduces credibility after a few years, I'd imagine.
Yeah, and even if that's not true, where they're getting reputable companies, that's where your mind goes, Ryan. So the reputation already gives them a competitive advantage. And we can see this play out because the stock exchanges, and I know this term gets overused sometimes, but I would say they are very Lindy. The Lindy effect is an idea that the longer something has been around, the better chance it has of sticking around in the future. Let's look at some examples here. The London Stock Exchange began in 1698, Tokyo Exchange, 1878. The New York Stock Exchange, 1792. All are still dominant players in their fields today. At least I think the Tokyo one, I hope that's true. But either way, London and New York, I know for sure, are the ones that still dominate in their field today. Which brings us to Bolsa. Bolsa Mexicana de Valores. As a note, the ticker here on the Mexican exchange, which I hope you use if you're going to buy this stock, because that would defeat the whole purpose of the investment, is BOLSAA with two A's. So BOLSAA. Now, if you're in the US and you don't have access to the Mexican stock exchange, you can use the US ADR, which is BOMX.F. It's a little bit confusing, I know, for people that if you're buying an international stock for the first time. So if there's any confusion there, email us, DM us on Twitter, respond to our Substack, try to ask us any questions. We don't want anyone to get confused. And if they're wanting to buy this, buying the wrong thing, that would be tough. So what is Bolsa, which is what I'll call during this episode? It is the Mexican stock exchange that was formed in 1894 in Mexico City. In 1975, the company merged with the Guadalajara and Monterrey stock exchanges. In 1988, it started digitizing its systems and, without boring the readers through all the updates and stuff over the years, it has tried to digitize, internationalize, and bring in more services and offerings ever since. Today, it remains the largest stock exchange in the country and the second largest in Latin America, with a total listed market capitalization on the exchange, according to their website, of $530 billion US. Now, in order to further hammer home this vital point about how there's usually only one or two stock exchanges and how they last for a long time, let's look at how upstart competitors fare when competing with legacy stock exchanges. 7 years ago, Mexico gave the green light to what was called BIVA, B-I-V-A, a second exchange on the Mexican market. This rightfully spooked Bolsa investors as it broke its monopoly. BIVA has gained a little share, I'd say likely due to the fact that it was, quote unquote, the new kid on the block and the government wanted to break up the 100% market share of Bolsa. But this has not necessarily killed Bolsa's business. I mean, there's a narrative out there that, okay, there's going to be price wars, blah, 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 I would look at the NASDAQ and New York Stock Exchange as an example of how a duopoly can play out quite well with stock exchanges in a market. Bolsa is now in a duopoly with 80% market share that, they were giving some over to BIVA for kind of the last decade or so, but that has worn off. I don't know if this was a pure monopoly business and now it goes to an 80% market share with only one formidable competitor in its country. I don't know if this turns from like a great business to a bad business overnight. That pretty much sums up why I think stock exchanges are good business, Ryan. Any follow-ups, confusion, any thoughts there?
Couple follow-ups. So first of all, it's always, you mentioned that the stock exchange was formed in 1894. It's always a reassuring thing to see that your company has been around for more than 100 years, because you at least have some sense that there's probably some durability here. The other part, I have a question for you. Do you think the listings that have hopped over or ceded to BIVA, do you think it was just kind of low-hanging fruit? They were waiting to jump onto BIVA? I guess, what do you think was the motive for listings to move over? If you were one of the companies.
Yeah, I think it's just the cross share of listings. They would, we can list on both now. And it's kind of like NASDAQ and New York Stock Exchange, where this is trading volume, and that's not necessarily listing volume. I don't have the numbers in front of me, but if you look at their annual report, they do have some stuff around. And as we'll get to, the equity listings, the stock listings are the big, I'd say, headwind here, or the big concern, and that's going to be the major risk we talk about near the end of this episode. But most of the new debt listings, or even all of them, are going on Bolsa and as their primary listing. So I don't know if that's necessarily a concern from a listing perspective, where there would be a risk of that, but it's just trading volumes where you might have you might be listing on both, something like that. Either way, if you're an investor, and I'll have this chart in the newsletter, they give out their market share, honestly, on a month-to-month basis of trading volume. So you can track that over time and, something to watch out for. Watch out for that average daily volume. And if they lose a little bit of share, that might be okay as long as their trading volume as a whole is going up, because it's not really the end of the world, I think, if this turns into a true duopoly with a much more even market share. But if trading volume isn't going up and they're ceding market share, well, that's definitely something to watch out for.
Okay, and before we move on, just to kind of summarize the Moat discussion that we've had here, it feels like the biggest advantage here is the reputational advantage, much like Moody's or Standard & Poor's, how if you want some sort of credit rating, you're going to that with the best reputation. Would you say that's the same for Mexican securities being listed on this exchange?
Yes, but I'd also say it's the aggregation. I'd say that comes first, but it's not bad when you have 100 years of reputation and are trusted.
Okay. All right. The other question here, and people may have winced or hopefully not tuned out when they heard that this was a Mexican stock. Why should you be bullish, or should you at all be bullish on the Mexican economy?
Yeah, it's a good question, Ryan. I know some people shy away from that market. And when we've had, again, I call him the Latin American correspondent, Ian, on the show, he always says that when someone talks to him about any sort of consulting or something about the Latin American market, they always ask right away, well, what about the Mexican cartels? So there is this narrative that it's just not a safe place to invest, when in reality, he would argue, and he has argued on our show before, if you're more interested in Mexican stocks as a whole, I would go listen to some of the episodes he's had with us. Can't find them, we'll send them over to you. But we sort of agree with a lot of his thoughts and what other people's thoughts are on the Mexican economy. We are very bullish on it, at least I am. And I've at least myself started to call the 2020s the Mexican decade. And so far, the last couple of years, it's proving out to be good so far. I mean, Mexican GDP per capita is starting to soar. If we look at this chart, which will be in the newsletter, it's just GDP per capita growth over time. It was stagnant from about 2005 to about the pandemic. And then the last few years, it's just totally gone from about $10,000 to up to $14,000. So it's exploded higher. And as a country's GDP per capita breaks through this $10,000 barrier, and then moves towards $20,000 and eventually higher, discretionary spending increases rapidly from individual consumers. Why? Because more and more people now have leftover income after the basic essentials of food, shelter, utilities, and transportation. Because in a country, say such as Mexico, when the average GDP or average incomes, or however you want to define it, are kind of in that 10,000 or lower range, you don't have much left over for after food, shelter, basic costs, your necessities, all that stuff. But then once your income doubles to $20,000, well, you're not going to double all that spending overnight. You could spend that excess money on a nice restaurant meal for your family. You can take a week-long vacation to the beach. You can finally remodel that house and get a nice patio and HVAC system. Or you can save that money and invest it in the stock market. Due to this, I think, and the fact that now a lot of brokerages have opened good products in Mexico, I would say two different examples would be Nubank and Interactive Brokers. The amount of retail brokerages accounts is soaring in the country. I might just share this chart. I think we can probably pretty easily show it for anyone on YouTube. I'll share it and then I'll just describe it here. Where does episode outline? There we go. Okay, in 2019, there were only 299,000 retail accounts in Mexico. November 2023, almost 7 million. Now, these accounts they're not seven-figure accounts for the most part yet. But if the economy keeps growing and incomes keep piling up, people have more savings. Well, this is, I think this is a good start for more trading to grow on the exchange.
So question here. Is there any risk that while these retail accounts are booming, it looks like they're up 7-fold in 3 years, is there any risk that somehow it circumvents the Bolsa? That maybe these people are creating accounts on some sort of digital brokerage that is not linking to the Mexican stock exchange, that is linking to...
These accounts this is data of accounts are linked to Bolsa. Have the ability to trade on an exchange. And you might argue, well, they'll probably have access to the U.S. markets, and people like the U.S. markets because they've done so well, and it kind of chases that mentality. And the key is, Mexican companies have to be profitable. There has to be investment in the country. The stocks have to start doing well, and then the momentum starts. Because even though, in 2011, U.S. stocks were a bargain, but no one wanted to buy them. Okay. And
makes sense.
It's weird how it doesn't necessarily strictly follow the economy, but if the economy starts doing well, companies start generating more profits, it's almost like a lag time to where people are going to start trading more. And what's weird is I saw a stat that I think one of the top 10 stocks traded on the Mexican stock exchange was the Tesla listing. So I think they still benefit a little bit from the US one. But as we'll talk about, the relationship to the US can be a blessing or a curse, because we could see companies. I think the risk there is not necessarily that the retail accounts get circumvented because they'll have access to the Mexican stock exchange, but that the companies circumvent them and list on the New York Stock Exchange or NASDAQ instead.
Doesn't Tesla have a facility in Monterrey?
That's not, I don't think that's happened yet. It's rumored to have some capital investments there. But as we'll get into here, there's a lot of other companies that have not only talked about investing manufacturing and industrial capacity in Mexico, but are actually doing it. And Ryan, one more follow-up before we go to there.
Yeah, I was just going to reiterate the number in case people missed it, but GDP per capita in Mexico has, I'm kind of doing the rough math here, looks like it's up north of 30% in the last 3 years. So the proof is kind of in the pudding here. It's not just speculation on our part. Pretty much everything is indicating that there's growing ability for consumption, potential consumption for Mexican consumers.
Yep, and I'm pretty confident that this is going to keep growing because of the changing strategic shift of the United States and its reshoring strategy. If anyone that follows like the business news or even just regular news in general, this stuff, it's in the news all the time, and it's something you've probably read about, so I'll sum it up quickly and why it's happening. First, China is acting more and more like an adversary to the United States. Maybe to be fair to any Chinese listeners we have, the U.S. is as well. Either way, the relationship has been souring and separating for years. The United States relies on China for manufacturing goods. And to put it simply, they don't like that if they're going to be more of an adversary. The third thing is Mexico can replace this manufacturing supply. It's as simple as that. And we are already seeing a ton of demand for this. Here are 4 recent headlines that I just saw by quickly looking at some other stuff I remember before just the last year. First one, Mexico sets historic record with $31.1 billion US in foreign direct investment. Second, private investors looking to capitalize on nearshoring trends turn to Mexico. Third, Foxconn building NVIDIA superchip facility in Mexico, executives say. Fourth, U.S. tech giants turn to Mexico to make AI gear, spurning China. I think that's, well, it's not hard data yet. I think that is showing that there is investment coming into the country. And that is one of the key reasons why China did so well over the last 4 or 5 decades after they opened up.
Okay, let's talk. Well, I guess before we get to the actual business segments, what do you think is the weakest part of this reshoring thesis?
Ooh, well, that's what I was going to ask you because I think it's pretty rock solid. But what do you think? Anything concern you that I'm confident on here?
No. I mean, this does start to delve into a bit of the political situation where it becomes slightly about relationships between America and Mexico. But I would say when the alternative is the relationship between America and China, we've seen how that's already played out. People are reshoring to Mexico, or they're reshoring facilities. I would not expect that to stop, regardless of who the president is or anything like that over the next decade.
Yeah, and I think what's more important is who the president of Mexico is now. She got elected. I think she's much better for this thesis, regardless of who likes him or not. Any Mexican listeners, I'm no expert on her policies, just because the old person, that guy, was very isolationist and frankly didn't even speak English, which is tough. So as more high-paying jobs come to Mexico, I think Mexican workers, they're going to have higher disposable incomes, and higher disposable incomes means more money to invest, buy stocks, ETFs, index funds, and I think Bolsa could take advantage of this. And then on the supply side, I think as the country gets wealthier, more companies will want to IPO, list on the public markets, and hopefully list on the Bolsa stock exchange.
All right, since we've led in there to Bolsa, let's actually talk about how they make money. What are their business segments, and what are the real primary revenue drivers here?
Yeah, from a bird's eye view, it's quite simple. It wants to, as I mentioned before, aggregate financial assets on its marketplace. It just has a lot of different revenue segments that can overwhelm those that are looking for the first time. If you go through its annual report, they are detailed, which is nice, but there's, I think, 30 or 40 pages just on their various business segments. And honestly, if anyone from Bolsa is listening, I would simplify those. We don't need to see all these together. But once you understand the various businesses, I think there are a few KPIs to track, which I would shout out to our friends at FinChat that basically have all of these: revenue growth, EBITDA margin, volume traded, and capital formation. Now, capital formation, they're not going to have on FinChat, but that is something that Bolsa itself has a chart on in every earnings report. So here's a list of all their different business segment offerings. First, there's capital formation. What this means is the listing and maintenance listing revenue for a financial asset to be traded on Bolsa. So when, you IPO on the exchange, you pay a fee for that. And then each year you pay a fee to be listed on there. Just a very simple business model. Now, the company has struggled to attract new equity listings, but has thrived in getting debt to be listed on its exchange. However, even though the equity markets or IPO market in Mexico is essentially dead, it is still earning revenue from existing listings that would be classified as the maintenance revenue. Now, the second one I'll talk about here is basically trading. There's equity trading, which is stocks, also bonds that are included in this segment. Then there's derivatives trading and OTC trading. The OTC trading also includes Chile, which is fine. Not a huge part of the business, but I guess I should just mention that. Within some of the equity trading, they include some value-added services, which are recurring revenue, kind of software and analytical stuff. If we go to the next segment, there's central securities depository. What this means is custody, clearing, and settlement of financial instruments traded. So this is another one of the classic things that an exchange will do. This is actually Bolsa's largest revenue driver, but not a majority of sales. I think it's something like a quarter. So you can see how diversified this business is and how it's not really reliant on one of these to drive the boat. Within the central securities depository segment, I would include also its 2 clearinghouse segments here. They're quite small, but not, you don't need to get into the nitty gritty here to understand the investment thesis. The last one I would say is market data. And then there's price, vendor, valuation, and risk management. But market data is important. Again, it's almost self-explanatory. They sell valuable market data to institutions that want it. There's a partnership with S&P to develop index benchmarks. If we look at all these buckets, I would just think about it in 4 ways. You have capital formation and listings revenue, trading revenue, clearinghouse and depository stuff, and then software and analytics. So it's almost step by step. You have to start with the listings, then there's trading, then there's the clearinghouse and depository, and then on top of it, we sell all the data. Does that make sense, Ryan? Seems fairly straightforward, but it's kind of hard to understand for someone if you're not in the nitty gritty of running an exchange business.
So regarding the listings revenue, basically companies to maintain their listing on Bolsa pay a fee each year, in addition to some of the other services that they're paying for.
Well, that within that segment, if you're on the exchange, you pay your maintenance revenue, and we can see this in the difference between the listing revenue, like within the capital formation segment, there's a fee to get listed. Do your IPO, whatever it is, and only 5% of the listing revenue comes from stocks, but 31% of the maintenance revenue comes from stocks. And the majority of the listing revenue comes from corporate debt, which is doing quite well at the moment.
This episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fund letters, podcasts, and more, they collect and summarize the best stock pitches and bring them to you in a single place. If you're a regular listener, you know that we use Yellow Brick every single week here on the podcast to discover new investments or just find reports on companies we've already heard of. Try it for yourself. Simply go to joinyellowbrick.com/chitchat and search a company or ticker you are interested in. You are bound to find a great report on just about any company. That's joinyellowbrick.com/chitchat.
Heads up, folks. Interest rates are falling, but you can still lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds on public.com. You might want to act fast because your yield isn't locked in until the time of purchase. Lock in a 6% or higher yield with a bond account only at public.com/chitchat stocks.
Do you have any sense of what the driver is there in terms of the weakness with new equity listings?
There's a few things that people talk about. One is the general valuations in the Mexican stock market. So you have this, say, business, and if you IPO, you might get a lower valuation than you think you deserve. There's these family-owned businesses, and there's also the fact that, I don't really understand all this too fully, but I'm glad that it's getting reformed. There are some things around the listing requirements, government requirements on pension assets and stuff like that with the government pension that they're trying to reform. I'd say almost similar maybe to the United Kingdom, but I'm not an expert on here, where trying to make it so more people kind of get invested in the stock market and hopefully drive a little bit of the flywheel there. But essentially the stock market in Mexico, at least the IPO market, has been dead for a while, and it's kind of hard to be the first person to get back in there because it's like, all right, what's the point? Are we going to get a better valuation? Do we need to sell stock? I don't know. Why would we go here?
So you would say it's more so just the overall industry and the environment around IPOs and equity listings, and not them ceding share to BIVA.
Oh yeah, it's not that. It's not that.
Okay.
Because we look at the stock market as a percentage of GDP in Mexico, it's something like 35%. That Buffett indicator is quite low, and I don't necessarily like the Buffett indicator too much because it just means a lot of companies are staying private, so they need an incentive to go public. I'll maybe share this chart here of their issuers revenue, and you can see the stagnation. On the one hand, like you look at it and you go, all right, it was growing for a while, and then boom, started to collapse because no one wanted to list on the Mexican stock exchange. But it has stabilized over the last few years. And part of this is because there's been a huge demand for the debt. And I think one of the theses you could have here is that the debt starts, these companies start doing well, they see that Bolsa is providing them with value. All right, are we going to list our stock? Sure, okay, and we'll do it on Bolsa.
How have interest rates impacted them at all? Or impacted debt issuance?
Well, I would say if anything, it's a headwind because they're at, I believe, 10% or higher because there was high inflation, and if they're starting to bring it down. Don't know how rapid that has been, but if anything, it's going to flip from a headwind to a tailwind. I doubt it's going to get worse, especially if the Federal Reserve in the United States is starting to lower interest rates as well.
Okay, so from all of these segments, all the revenue drivers we talked about, if we zoom out 5 years, which segment do you think will have grown revenue the quickest?
Ooh, the quickest? Well, in like the bull scenario where the stock market equity listings pick up, I would say the trading revenue, because there will be that, it's almost like coming out of the grave, right? It's been dead for a while, and people are going to start trading again, and there's kind of that momentum that keeps building on itself. But I would say the one I have the most confidence that is going to keep growing would be the information services revenue, which again, FinChat has a nice KPI on. It has grown at a fairly steady, foreign currency can kind of throw a wrench in there, but a fairly steady 10.4% annual rate since 2013. And that one is much, much steadier than any of the other KPIs we've seen.
Yeah, I'm sharing the chart here for anyone that's listening, and it's been pretty much just stepping up and to the right for more than a decade now. What's the slowdown over the last 12 months?
I think I'm not exactly sure, but I believe the currency stuff can affect them.
Okay.
I don't know. Honestly, it's
I guess that makes sense.
the peso versus the US dollar has swung fairly wildly, and honestly, it's helping for any investors that are buying now because the peso is depreciating. But they have different revenue segments where, like, okay, there's pulls and takes there, or give and take. Where if you're a U.S. investor, you buy a Mexican stock, and the peso depreciates, well, okay, you might not earn that much in U.S. dollars, even if the stock price goes up. But for their business, they earn some revenue in U.S. dollars with some of their contracts. So that can make the revenue get hurt if the peso appreciates versus the US dollar.
We're going to talk about this in a second, but there is a nice healthy dividend here as well.
Oh, it is healthy.
If it's not reinvested, if you choose to collect that throughout your time owning the stock, it can serve as a bit of a currency hedge as well, which is nice. But let's talk about the unit economics. What do their profit margins look like? What are their actual costs? And where do you think this can go in the future?
Yeah, let's look at that. Regarding the segments, again, we were almost getting into there. We can kind of talk in circles forever. Like, what are the headwinds and tailwinds to all these various segments? Again, I would just look at the segment revenue. We'll talk about here, EBITDA margin, and then some of the trading volume stuff and capital formation as the overall things you need to track each quarter. Because if you look at every single data point they give, there's almost hundreds, and that's just going to overwhelm you. But yeah, one thing we don't have to worry about with Bolsa is the unit economics. It has a few fixed costs: cloud, database, overhead, licensing stuff with like S&P Global or NASDAQ or something like that. And those are going to barely scale with the business. Now, some of them might, but it can grow without much capital reinvestment. It sounds to me, and Ryan, tell me if you agree or disagree here, because I think it's almost an obvious one. It's a perfect Warren Buffett gross profit royalty operation. And that's like all stock exchanges in general.
Yeah, I mean, it's just not that capital intensive once you've been running this business for 150 years or whatever it is for them. Like you said, the capital reinvestment needed is not that high unless maybe you have like surging trading volume and all of a sudden you have to increase your cloud capacity, but that's a good thing to have.
That's true. Yeah. Yeah. You should hopefully have good margins there. And that's not necessarily capital, I guess. They don't need to buy a bunch of facilities. But either way,
Yeah.
those are the expenses. They're not going to have 90% EBITDA margins. And what the gross profit royalty definition is where you're making a bunch of money on the hard work of other companies. And in this case, that's true. All these companies are working hard. They're getting bigger. They're listing on the exchanges. They're getting more profitable. Okay. Then Bolsa makes more money. And with the debt is too. And then the traders, well, they're doing the same thing. They're working very hard to make Bolsa money. It's a nice non-zero sum operation. And if we look at their actual numbers, regardless of any headwinds or tailwinds they've gone through, profit margins, operating margin have stayed close to 50% or higher, even in what I would call here potentially trough earnings period. Now in 2023, EBITDA margin was 57%. Last quarter, 58%. If we look at this, you can say some of the parts of the business are struggling. Even though it's in a period of struggle, they are getting best in class profit margins, and I have no concern over their ability to extract enough profits from the financial ecosystem as long as they can maintain a good enough scale. If they can't and the whole thing unwinds, well, thesis is busted anyways. Another tidbit I would highlight that's a huge positive here is the permanent inflation protection afforded by a stock exchange. Most of these businesses have a pure inflation hedge. Higher nominal trading volumes equals more revenue. More capital in the central depositories means more revenue. If you are worried about inflation, an exchange is a good place to hide, if you buy at the right price, of course.
Okay, so you've mentioned that there are tons of profits here, which makes sense. It's just spitting off cash and making money off other companies' hard work. What are they, I guess, talk through the valuation and then maybe talk through the capital allocation. What are they doing with that cash?
Yeah, that's true. For anyone that hasn't listened before, or for anyone that's been a long time listener, you probably know that we care about two things with valuation. How much are they gonna earn, and then what's management gonna do with it? Because there are a lot of companies that earn money and then perhaps waste it, as we've complained about for a long while on the show. So typically, when I look at a stock, I try to find a reasonable growth assumption for a stock and work back to its valuation. Ask a few questions like, what could it be earning in 3 years? What are normalized earnings? What could it be earning in 5 years? And then what do I think it would be trading at a reasonable earnings multiple? Then compare it back to the current price. With Bolsa, I want to look at its current earnings profile and then look forward for any cherry on top that can come with growth, because I think the more important part of the thesis here isn't the upside, but maybe the floor and the low downside. Now, it's a dangerous thing to say, but I think it's true. We don't necessarily need growth to make money here, just stable earnings. But growth would be nice and I think would lead to 15% annual returns. So, over the last 12 months, Bolsa has generated about 1.8 billion pesos in operating income per FinChat. Currently has a market cap of 18.5 billion pesos, or about 10 times those earnings. Chop off about 3 billion pesos in net cash, and you have an EV to EBIT of 8.6. If we go to the capital allocation or capital returns, Bolsa pays a large portion of its earnings out as a dividend, a yield of over 6% today. I think actually closer to 6.5%. Now it is also bringing shares outstanding down through buybacks, with shares down at a 1.6% annual rate in the last few quarters. Capital returns, I have zero concern about. I think it's a strong part of this business. I think they understand they're capital light and they can pump cash back to shareholders. while still reinvesting in whatever tech, operations, and scale they need.
Sorry, yeah, I'll give you a break there. So, yeah, the shares outstanding looks strong. I mean, it kind of gets distorted because of the y-axis here, but it's been a gradual decline. And sometimes it just gives me a little bit of comfort in knowing that they use it. Like, that it's not, that management has the wherewithal, if the stock gets cheap, that this is a lever they can pull. Because even if it hasn't been like a huge share cannibal, where we're not talking about 5% annual reduction in shares, you know that if things were to go bad or if the stock were to get hammered, you could at least take advantage of that, or management would as a shareholder. Anything else as far as capital allocation? Maybe we can talk about some of the multiple compression and potential returns from here.
I don't think so. 6.5% dividend yield, I think it explains itself. If you think like they're going to pay out a lot of their earnings in dividends, so if you think the earnings are stable or going to grow, well, that's where the dividend will go.
I'm looking here at sorry, I'm kind of talking through it while I do this here, the dividend chart over time. And the dividends per share have gone from 60 cents a share in 2010, 68 cents per share in 2010, to just over $2 in the last 12 months. So, yes, not only are you getting that nice, healthy, comfortable dividend yield, but they have shown a proclivity or a propensity to increase that dividend over time as well. What do you see as the biggest risk here?
Biggest risk? Oh, well, let's get to that next. I have that for the next section. But let's talk about the valuation before that.
Sure, go through it.
If Mexican financial markets don't come back to life, I still think through pricing power and inflation that Bolsa can maintain this dividend yield. So the price doesn't go anywhere. You get a 6% plus annual return for being wrong. I don't think that is bad downside protection. Now, of course, you could argue, well, we could see more multiple compression, but that has already happened to a major extent. The stock has gone from about 16 times earnings to 8 on an EV to EBIT level. PE probably closer to 10 or a little bit higher. Well, okay, it could go down to 5, sure, but that means the dividend yield's going to approach 10, and they're going to be able to buy back 3-4% of their stock a year as well. That means I think long-term returns are even better because eventually it'll catch back up. But what about the upside? I think there's a case to be made for the Mexican stock market coming back to life over the next 5 years. Now, do I have 95% certainty of this happening or confidence? No. But we are really only missing one aspect of the equation, which I outline in the next section. That's part of our major risk. And if the stock market does recover, I'm not saying like the prices of assets, but the trading volume and the IPOs, I think we see earnings per share grow in the double digits for Bolsa due to revenue growth, slight margin expansion, and more buybacks. Add on some multiple expansion to that, I think a business like this, even if it's in Mexico, deserves to trade at 20 times earnings. You have the dividend payouts as well. I think you can get a comfortable 15% return from these prices if things go right. All right, folks, if you're a regular listener to Chit Chat Stocks, then you know that we use finchat.io daily. FinChat is the complete stock research platform for fundamental investors. They have robust financial data on more than 100,000 stocks globally, including company-specific segment and KPI data. Want to see Google's Cloud's quarterly revenue growth? FinChat's got it. Like to track PayPal's take rate? They've got that too. And they recently added sell-side conferences and insider transactions to the platform. Best part is it's completely free to sign up. However, if you want to get unlimited data, you can use our link finchat.io/chitchat to get 15% off any paid plans. The link will be in the show notes.
Yeah, I mean, I do think there's room for multiple expansion. It looks like it's traded at typically mid-teens EV to EBIT throughout most of the last decade, and it's kind of just dropped down over the last 2 or 3 years. So it wouldn't be out of the ballpark some big shift to see it trading back at a mid-teens earnings multiple. And yeah, like you said, I think for a business that has been around for 130 years, has a wide moat, has a long history of growing revenue and earnings, it doesn't seem out of the realm of possibility to give it a little bit of a higher valuation than single digits EBIT multiple. So I agree with you there. Let's talk through some of the risks, because no business or no investment is without its risks. What would you say is your biggest concern here? And I guess another question, I hope you're buying the Mexican listed security.
Well, that is true. Yeah. I'd
To
say
support your thesis.
yeah, it'd be dishonest to use the US ADR. Yes, that is true. I did think about that. But there are a few risks to investment in Bolsa. I mean, there's ones that everyone talks about with Mexican stocks. You're like, oh, you're tied to the Mexican peso. That could devalue. Yeah, that's true. I don't know how unlikely that is, but it also work in your favor. I don't know. There's the reshoring narrative, and GDP growth in Mexico might fall flat. Maybe we just saw a short-term boost here. It doesn't materialize. I think the momentum there is only starting to grow, but it's not an impossibility if I'm totally wrong there. Even if that happens, again, I still think we make money, because that means that it's almost the status quo. Now, there's also the one people talk about, which is the cartel, which I would almost laugh off. Like, there's criminal gangs and stuff in every country. All right. And the United
they
States
could
Stock
launch their
Exchange
own
has been
exchange, Brett.
around. What?
The cartel could launch its own exchange.
Yeah, are we gonna have the cartel's gonna launch an exchange? Yeah, let's do that. Just think about all the concerns you have about the Mexican political or cartel stuff. The stock exchange has been around since 1894 and has survived that. So just think about if that's your bear case, like maybe you're totally wrong. All right, but the one bear case, and I think the key risk here is getting energy into the equity listings on Bolsa. I called it in the write-up the fulcrum to the investment I mentioned at the beginning of the write-up for anyone that reads the newsletter. And I do have a real fear that Mexican companies don't want to list on Bolsa, just want to stay private, want to be family-owned, or would rather just list in the United States. I mean, if I was a globalized company based in Mexico, why wouldn't I list on the New York Stock Exchange as my primary listing with maybe a secondary listing in Mexico? Capital markets are deeper and you get better valuations. The good news is that we are seeing a ton of demand for debt offerings on Bolsa in 2024 and the last few years. But the bad news is in 2024 so far, there have been zero equity offerings. And in 2023, there was one. So if we look at this, though, like the debt stuff is exciting. Like you have, let's see, over the first 9 months of 2024, they had 61 new listings for medium and long-term debt, which is stuff that you're going to get maintenance revenue on for years and years and years. And there are over 1,000 new listings for short-term debt. In 2023, there were similar numbers. Stocks are about the opposite, though.
Yeah, and that's the short-term debt new listings looks like it's up 13% relative to the 9 months prior. So higher. Seems like there's growing interest in listing your debt there. Might also be an interest rate impact. Could be wrong there.
Maybe, but again, if anything, that's going to be a tailwind. I should have had that number in front of me, but let's look at, I can probably even search for it live. Mexico, central bank interest rate. Let's see. Yes, Trading Economics, great free website that has this. Yep. Starting at the beginning of this year, they went from 11.25% and have kept dropping, and now they're at 10.5%. I would hope, because in 2022 was down, 2021 was down at 5%. I would hope that it keeps dropping, and that can hopefully supercharge these debt offerings as well. And you can just see that with this it's less Silicon Valley. It's more industrial manufacturing stuff, which leans more towards the debt side of things.
Tesla. I guess
that's
started
true.
in Silicon Valley. Not really there anymore, but
yeah, that might be a unique one. Now, this table, which I'll have in the report, and you can find in all their earnings releases, is the most important KPI I will be following with Bolsa. I mean, if equity offerings don't improve within the next 5 to 6 quarters, like at all, that's one of the reasons I would consider selling and thinking I'm wrong here.
Okay. Yeah, it makes sense. Let's talk portfolio management. How do you plan to size this position / manage it over time?
Yeah, so full disclosure, a few weeks ago made BOLSAA a core buy and hold position in my Roth IRA. So hopefully, no taxes there on the dividends, although I always get confused on what happens with international stocks. It is an approximate 5% position right now, and I wouldn't be opposed to upping that up to closer to 10% over time. It is, I kind of run with about 10 positions. Some of them might be smaller, some of them might be higher than a 10% allocation, but I think this one would be probably in between that 5% and 10% range. My plan is to not reinvest dividends. I kind of will choose whether or not to do that with myself, and it gives you. I like it from the currency hedging perspective, but in general, I almost am a little against reinvesting dividends if you're an active investor because you can choose to do that yourself. There's positives and negatives to doing either. But the overall plan is to hold BOLSA indefinitely. I don't have a plan to sell unless the business tells me I am wrong about my thesis or Mr. Market in Mexico goes crazy, which would honestly probably be very bullish for the company's earnings. So it would be a self-reinforcing cycle. But if that stock got crazy and started trading at 40 times earnings and it was growing earnings by just 10% under my bull scenario, well, it's not something I necessarily want to own, but that's a great problem to have. And that would mean that the original thesis is right.
Yeah, and kind of flipping that, it would be very hard for this company to trade at 40 times earnings without their earnings actually like shooting up, because that would imply that, I assume, that would imply that trading volume across the economy is up substantially. So, yeah, it's kind of like you said, a little bit. Earnings will probably be somewhat tied to the multiple here, would be my guess.
Yeah. What's interesting, though, is that the Mexico stock ETF, let me just pull it up here. I think the ticker is EWW. It's an iShares MSCI one. I honestly think it's done much better than this stock. This stock, excluding dividends, is down, I think, like flat over the last decade. If we look at the last year, no, let's do 3 years. Mexican stocks, oh yeah, I guess they had a big drawdown over the last couple months. So the returns haven't been nearly as good. But either way, if they do keep improving, that should help someone like BOLSA.
Makes sense.
Sorry, that was kind of confusing. I thought the returns were doing. I thought the overall, Mexico ETF, Mexican stock market was performing better than it had been.
You may have touched on this already, but do you have any data on how many brokerage services like Interactive Brokers are adding integrations with the Mexican Stock Exchange?
No, but that chart I think is fine. It's self-explanatory. They
chart?
hopefully will keep including that. The positives I would have are the fact that Interactive Brokers is growing, which has that international exposure, and the fact that Nubank is growing rapidly in Mexico.
Are those the two biggest ones for them that are international brokerage services? Do you know?
No clue. After I saw that chart, I honestly said, all right, that part of the thesis, there's no concern.
You're talking about the retail traders chart?
Yeah. When I saw that, I was like, okay, I don't need to worry about this anymore.
Yeah, that's a good point. I think that's pretty much everything. Anything else that we didn't touch on?
I don't think so, but I want to hear your thoughts, Ryan. Are you inspired to research this further? What do you think? Are you bullish Mexico? Any thoughts from the episode?
I am bullish Mexico. I think this honestly seems like a pretty bulletproof investment, but it feels weird. I don't currently use Interactive Brokers, and so it would feel a little strange to buy the ADR, since it's like no, it's like you're not supporting the business. No, that's kind of a small, just little knack, and I need to get on IBKR. But yeah, it's probably one I could see myself owning. And it seems like a good time to do it, given where the valuation is today versus its history, and that they seem to no longer be ceding share to Biva, or at least it has stabilized a bit. So yeah, I like it. This is probably one of the more convincing pitches that I've heard or that we've discussed over the last, I don't know, few that we've had. And it's one of the few where you've been, maybe I'm blanking on some of the recent ones, concrete on like that you are a shareholder and it's a buy and hold position as opposed to just a research report.
Yeah, well, this one I ended up buying and then doing kind of the research, a little bit of the invest and then investigate style, because I read a few good reports from other people on it and said, hey, it makes sense. Stock looks cheap. All right, let's get into it. But yeah, like compared to Celsius, I'm really on the fence with that one. Remitly, I ended up buying, and then some other ones. Well, I can't remember either. But yeah, less on the fence. This one was like, all right, seems very cheap. Let's take after it. Seems like a high quality business. Because at the start, you go, all right, it's a very cheap stock exchange. Those are very high quality businesses.
Yeah, I like stock exchanges in general. And basically, anytime I'm looking at an emerging economy, like if I get bullish on, like if you use that, whatever, Buffett indicator, the GDP to, or total market cap across all equities in a country to their GDP, if you're filtering for the lowest ones, the first business I look for is a stock exchange because it's very simple, it's very durable, has a wide moat, and a lot of pretty much every country I think has like a central one. So, yeah, I think it's easy to understand and certainly durable business.
That's a good point on the connection between the Buffett indicator, which isn't perfect, but that's if you're bullish on an economy like Mexico, and then you see that Buffett indicator is at 34% of GDP, which is it's typically like 100% or something higher, and you think, all right, if the economy keeps growing, maybe that turns into 100%. That could very, very much benefit a stock exchange over the next 10, 20 years.
So you did adopt the Druckenmiller buy now, analyze later approach.
A little. I not nearly as much as like, hey, buy this, then find out what the business does. I did some basic research. I said, all right, I'll take a position on, and then I'll do the research report later because it was fairly convincing given the basics of the moat plus the valuation. Like, all right, I'm probably 80% in here, but let me just kind of round out the corners.
Makes sense. All right, I think that just about sums it up. We've covered everything. I will give a little tease here. I don't know if it's next week, maybe the week after, but I've got my research report coming up, and it will be hopefully an enticing serial acquirer. I believe we're going to title it maybe potentially the next Constellation Software. Hopefully that doesn't upset any Constellation Software shareholders.
Yeah, you're going to try to jinx the company.
Yeah, honestly, that might that might be the kiss of death right there. Yeah, but we've got that to look forward to. Anything else on the calendar that listeners should be looking out for?
Fun interviews. We're going to do some on some undiscovered stocks, hopefully some on some well-known stocks, mix it up a bit. I know some people like that small cap of the week style where we go for something undiscovered, but we're going to mix and match. And for our next investor that we cover, David Gardner. So that one will be fun as well.
Yeah, we got to find we got to go through his old investments. That'll be fun. And possibly one of the greatest single stock investments of all time, which we've alluded to a number of times on the show. So that'll also be fun. But I think that's going to do it. So let's wrap up here. We want to thank everyone for tuning in and listening to this episode. Hopefully you got some value out of this pitch and you might take a look at the company for yourself, do your own research. We want to remind you, though, that Brett and I are not financial advisors. Anything we say or discuss here on Chit Chat Stocks is not formal advice or a recommendation. We may buy, sell, or hold any securities discussed in this podcast. Thank you all for tuning in, and we'll see you next time.